Hey everyone, it's Hima here, and we are going to go for a skinny dip. That is a deep look into the ES, NQ, and YM futures markets. Today is Wednesday, June 19th, 2019. Important reminder before we take a look at the charts that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. So for those of you newer to my work, the reason I am calling this video a skinny dip is because my daily futures research is called the Skinny on the Mini. It focuses on the ES every day and the Nasdaq Mini on Mondays and Wednesdays. But I'm going to take a look at the ES, NQ, and YM today because there are a few different market timing tools that are coming together or showing confluence, and I want us all to be aware. So today, I actually rolled or moved forward the analysis, the price support and resistance, etc. on the ES and NQ charts from the June contract, which expires later this week, to the September contract. And the rollover date was last Friday, but I was on a little vacation, so I came back and did it today. Now, the daily chart you see in front of you shows that I have a vertical line on June 21st. June 21st is likely to be a high in this market. Now, it doesn't mean the high. It doesn't mean you should go short it necessarily. It's just suggesting that from the current price action, we should continue to rally into June 21st, and that's this Friday. So that's not far off. Notice also that right now, my RSI Power Zones indicator is showing the RSI still recovering after posting the low that we had on June 3rd. But in the bear resistance power zone, a potential area where it may end up capping out, and if price also forms a high, this might lead to the formation of a swing high in the daily charts that would create a pause in this market or a possible bigger picture downturn, because it's important to note that we are actually getting pretty close back towards the all-time high. And if price can't break through that and RSI hangs out in the bear resistance power zone, that would set the stage again for short-term weakness. So we're not into it just yet. Again, short-term, I'm seeing further upside potential into Friday, June 21st. On the intraday charts, I'll be getting more specific with what time of day that potential high or pause in the market is likely to form, and that information will be in the Skinny on the Mini. So that's what I have to say about the ES. Now let's move on to the NQ. So here's the chart of the daily Nasdaq, also showing the September 2019 front month. And interestingly enough, I'm coming up with the same calculation for potential timing point, in this case, trading up into forming a high into June 21st. Now, in this case, you can see that the RSI is still in the bear resistance power zone, but it's actually not quite as high as the reading was on the ES. Again, on the Skinny and the Mini report for the NQ, I have detailed support and resistance levels, and the next update on those would be on Monday. But as we carry out, I keep an eye on June 21st as a potential date for a high, and keep an eye on the RSI in the bear resistance power zone to see if it's able to break up through or if it gets capped in this area. Lastly, we have the YM futures. Now, this chart looks different by design. For starters, we're looking at a weekly time frame. So every price bar represents 1 week, not 1 day. And I'm showing you just price bars, open, high, low, close, not candlesticks. I'm doing this on purpose because I want to bring your attention to an underlying 20-week cycle that has been dominant in this market since early 2016, okay? So the thing about cycles is that they can contract and expand, but still persist. For example, we had a series of 21 weeks between two sets of price highs and lows, and then another round where we had 19 weeks and then 21 weeks. So the important thing is to realize that this is bringing your focus into just a couple weeks when you're applying it on this weekly time frame, and that can help you be ready for market turns or accelerations. Now, the latest analysis, which is over to the right, shows that this week, which is the week ending June 21st, which, as I mentioned, for NQ and ES, June 21st is showing as a timing point. That week on YM is showing as a potential week for a market turn. In this case, since we're rallying into that price action, I think it's more likely to coincide with the potential for a high. So these are early signals suggesting that while we might have a couple more days of bullish price action, it's likely to pause by the end of day, Friday, June 21st, and potentially form a swing high. Again, I'm not calling for the top of all tops, but looking at the early signs can prepare you for pauses in the market, which might end up being opportunities to recalibrate, find sideways ranges for breakouts, and take advantage of the price action in that way. So that is the skinny dip for you today on the ES, NQ, and YM. You can sign up at himaready.com/gift to get my Wednesday wire as soon as I publish right to your inbox.